the best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Bitcoin is evolving from a passive store of value into an active foundation for decentralized finance, known as BTCFi. Now, with total value locked growing from $300 million to over $6.6 billion in just a year, BTCFi is unlocking new use cases like lending, restaking, stablecoins, and decentralized trading without sacrificing Bitcoin's core principles of decentralization and self-custody. So what's BTCFi's investment potential? And what about its key risks and the catalysts that could drive or hinder its long-term success? Where are the most compelling opportunities, and what must happen for BTCFi to scale meaningfully? Well, to find out more, joining me now is Takatoshi Shibayama, who is the head of APAC of Ledger and podcast host of Blockcast. Thank you so much for joining me, Takatoshi.
Thank you, Hongbin. I'm very excited to be here.
I'm very excited to have you on here on the show. Well, once primarily a store of value, Bitcoin looks like it is evolving into a broader decentralized financial ecosystem with the emergence of Bitcoin DeFi. How do you define BTCFi, and how does it differ from traditional DeFi on Ethereum? How exactly does it work?
Yeah, so it's pretty much the same as any DeFi opportunity, but what's different is that historically Bitcoin was just Bitcoin. It was not really built to build anything on top of it, where Ethereum had that in mind. So Bitcoin Fi came out of this because there's only long-term holders of Bitcoin. They can't do anything with it, right? It doesn't generate any yield. There's nothing to do with it. So this demand came from basically the user side too, and say, I want to use Bitcoin for something else. I want to use it for borrowing and lending. I want to earn some yield on it. Many things that people are already seeing on the Ethereum DeFi ecosystem, they wanted to see it on Bitcoin as well.
Okay. So do you think BTCFi is complementary to, BTC ETFs, or could it emerge as a decentralized alternative? How would you compare the risk profiles here?
Yeah, they could be absolutely the same. For the BTC ETFs, it's more for the traditional investors, right? You have institutional investors or credit investors then get a hold of the ETF. Sooner or later, there'll be inverse ETFs, leverage ETFs. There's already an option market, there's a future market, but that's for the traditional markets. You're still working on T+2 settlement cycles. And for the BTCFi, it's decentralized. It's for retail people as well. On-chain settlements can happen instantly, and they can explore this angle where there's going to be a lot more innovation, things that you don't actually see in the traditional world.
Right. Well, the total value locked in BTCFi protocols has surged from $307 million in January 2024 to $6.6 billion in February 2025, which is a staggering 2,050% increase. What do you think are the primary catalysts behind the surge, and is the growth sustainable?
Yeah. So primary cause for this is the launch of this protocol called Babylon. So right now they have about 6 billion of total value locked into that protocol. And should I go into what Babylon is?
Yes, please.
Yeah. So Babylon is a staking protocol. So you mentioned as well that Bitcoin doesn't have any yield. So they designed this protocol so that Bitcoin can actually get some yield. So the way it works, and it goes a little bit technical, forgive me for that, but you can hold your Bitcoins in your wallet, but this protocol adds a time lock and a timestamp script to the wallet so that they know exactly when you locked your Bitcoin. And then they created their own blockchain called the Babylon Genesis, and that value gets credited to that blockchain, which is a proof of stake blockchain, which generates yields for the Bitcoin. So Bitcoin, there's no native staking. So it kind of acts like an Ethereum or any other proof of stake chain to provide yield for the Bitcoin holders.
Very interesting. Well, the recent news about USDT integration with the Lightning Network marks a significant milestone as well, potentially unlocking massive liquidity for the sector. How might USDT's integration with the Lightning Network change Bitcoin's role in the stablecoin and DeFi market then?
The Lightning Network is another layer built on top of Bitcoin in order for processing faster payments. So USDT is about 160 billion of market cap. So imagine some of that flow coming into Lightning Network, and it's going to be secured by the, I would say, the most secure blockchain. So it allows for the people who are transacting on USDT to be able to do it in an extremely safe environment.
Well, with stablecoin flows dominating dominating crypto trading volume as well. How do you see USDT on Lightning, impacting Bitcoin's competitiveness as a financial layer?
Yeah. So Lightning Network, as mentioned, is for payments.
Right.
And actually the biggest use case for USDT is actually payments. Crypto trading is one part of it, but payments is much larger. So imagine some of that flow going into Lightning Network that's secured by Bitcoin. So it doesn't really impact Bitcoin per se, but it impacts more of the USDT users that they know that they're transacting on a safe protocol.
Okay. Well, BTCFi may present a large untapped opportunity here with only about 0.79% of BTC currently utilized in DeFi. So with less than 1% of BTC currently active in DeFi here, what would it take to mobilize even a fraction of idle, Bitcoin into BTCFi protocols?
Yeah. So most of the BTC is held by a lot of large corporations, governments that have been confiscated for criminal activity and things. And so, or ETFs as well, as you know. So those are the lion's share of BTC holders. And then the rest are retail. I can't quantify how much exactly are retail holders, but generally, historically, BTC holders are very long-term minded. They want to hold Bitcoin because it's going to appreciate in value. So most people don't really want to risk their Bitcoin. So going back to the early questions that you had, what is the risk? So, if you do BTC ETF, obviously there are some counterparty risks there potentially, but, it's still quantifiable. But on the DeFi space, the risk is technology, right? So there's smart contracts involved. There's transparency in those smart contracts, but most of people can't read those codes, right? So there's a bit of risk there. So a lot of long-term Bitcoin holders are a little bit scared to take their Bitcoin out of their wallet and then you put it into DeFi. So I think that's the technical part needs to be battle tested through various market cycles for people like me who are long-term Bitcoin holders to say, okay, maybe I'll try this out.
All right. Well, now that we understand the risks involved here, are there any BTCFi protocols or assets you would consider blue chip in this emerging sector and why?
Yeah, absolutely. So I just mentioned about Babylon. So other blue chips are actually built on top of this.
Okay.
So, to give it a bit more utility, not just to yield. So there's another company that's probably second in this DeFi space for Bitcoin. It's a company called Lombard. And what they do is that once your Bitcoin is through Lombard, staked into Babylon, they'll issue you a synthetic version of that Bitcoin for you to actually use that into another DeFi solution. So you get double use of that Bitcoin. So this is a major use case that we've seen in the Ethereum space, championed by Lido through their staked ETH. And we're kind of looking to see where those Bitcoins or the staked Bitcoins can be used in other DeFi spaces.
Very interesting. So what kind of investment strategies then should investors have for getting early exposure to BTCFi, whether or not it's direct protocol tokens, infrastructure plays, or synthetic BTCFi indices?
Yeah, well, anybody who's coming into the space shouldn't really go to the most extreme type of DeFi protocols. They should look at very simple stuff. Maybe try out Babylon and see what kind of returns are you getting. Are you comfortable with that risk? Maybe you can go to Lombard and see if you want to have a double use for your Bitcoin, right? So let's start something simple, and then you could go down or go up the risk profile, and then there are some asset management products that people can invest into using Bitcoin. Or maybe you want to lend your Bitcoins for USDT. There's a lot of companies that are doing that, exploring that right now. So yeah, just stick to the simple stuff and then see how it goes.
Take it step at a time.
Yeah.
Well, then which early signals or leading indicators do you track to, assess momentum or rotation into BTCFi markets? And what valuation frameworks or metrics would you use to assess the long-term value of these BTCFi protocols?
Yeah, that's a very challenging question to answer. So let me break down the first question. So, the first part is that there's something in DeFi called total value locked. I just mentioned before, it's called TVL. And then you can see how much value is locked in those DeFi protocols. So you start to see a surge in those numbers, then you know that people are rotating other crypto assets or maybe new joiners are coming. And then the more value that is getting into those Bitcoin DeFi protocols. The second part is I have to explain how crypto companies work, right? So companies companies like your Ethereums or, Solana, all these other companies, what they're called is foundations. And foundations are not really revenue generating businesses. So basically what they do is first they raise capital from investors and then use that treasury to fund their business, build their products. And then afterwards they issue a token. And they issue a token and then they sell that into the market. And they also have that as their own treasuries to fund their business, pay employees, vendors, etc. So that's one part of it. The other part is how do you get people to actively engage in that protocol is by making sure that looking at the staking side of it. So proof of chain works where people stake assets so that they can get also a return and then also securing the network. Right. So if you see that the staking rewards or the yield is coming down, it means that more and more people are actually staking it. So you can look at how the token is performing in the markets and then how much adoption you have of that blockchain through looking at the yields of the staking.
Wow, that's very interesting. Well, some great insights from you here, Takatoshi. But just to wrap up our conversation here, overall, how might BTCFi impact Bitcoin's correlation to traditional assets, like gold or equities, as it becomes more capital productive and DeFi integrated?
Yeah, so Bitcoin has always been a speculative asset class, right? And then the more adoption you have, the less volatility it will have. And the original concept of Bitcoin, as you already know, it was supposed to be a medium of exchange, accounts and store of value. Unfortunately, the first two didn't really work out too much, but the store of value narrative is very strong, especially in the institutional space. Have you already seen like ETFs coming in? You've seen corporations like MicroStrategies and a few other companies spinning up to hold Bitcoin as reserves. So they're carrying on the narrative of Bitcoin being the store of value. So it will start to act more like gold, in my view. It wouldn't be like such a risk asset like equities. So in my mind, going forward, I think the more institutional adoption you see, and then more adoption of these Bitcoin finance related things, regardless of DeFi or in the traditional space, it will act more and more like store of value.
Wow. Well, thank you so much for those insights today.
Yeah, thank you very much.
Thank you. That was Takatoshi Shibayama, who is the head of APAC of Ledger and podcast host of Blockcast. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.